Hey guys, it's Tim Rhey with Mortgage Ballers, and Mortgage Ballers is just a show about covering everything mortgage related, whether it be mortgage products, technology, news, updates, and of course the 500-pound elephant in everybody's office, and that is mortgage rates. Today I'm going to talk about what we know and what we project and what we think we could see in the coming months. So stick around. All right, guys, so let's start with talking about these mortgage rates. What do we know today? Now, if you follow me on Instagram, then you know we're pretty big on looking at and analyzing the bond market as well as the 10-year treasury, like most mortgage prognosticators. Here's what's going on and here's what we know. So this year obviously has been a little bit funny, right? It's an election year, which automatically spells instability. And remember, markets really don't like instability because markets are like gambling, right? If you don't know who the starting quarterback is going to be next week, it's really hard to bet on that game, right? Investors kind of think the same way. Who's going to come into office, and what does that mean for the economy? Is the new person that comes into office going to be more, somebody who builds a hotter economy, or is it going to be somebody who comes in and maybe takes a different approach? So all of those factors can impact the economy, and they can impact mortgage rates because of the instability factor. So that aside, this is not a political post. This is just a post about what's happened and what I think could happen in the future. Now, what is going on with mortgage rates? We know this thing. We know that there was a big rate cut last month. Everybody was excited about it. And by the way, that rate cut has been on the radar for a while. It was leaked months ago that there was going to be a rate cut. Well, on the day of the rate cut, what happened? Rates didn't really get better, did they? But let's be real here for a minute. The lead up to that rate cut, rates got much better. In fact, rates got so much better that many people discovered an opportunity to refinance. So maybe to go from 7.5 down to like 6.875, which is a vast improvement, and it could save you $200 a month. So there was a little window of a refinance opportunity last month. We all knew about it. I talked to many clients about it, and we didn't lock. A lot of us didn't lock. And the reason why was because we knew that it was an improvement, but it could get better, and we know it's going to get better. It must have been 6 months ago. It was widely, it was hey, the September cut is coming. We're going to be 50 basis points. So the market drastically improved. Then here's the big kicker, guys. The cut happened, and rates didn't get better. They had gotten better over the last month, a lot better, but nothing happened. Everybody's looking around. What are we doing here? And actually, a week later, the Fed dropped a bombshell on us. The Fed released the BLS, Bureau of Labor Statistics report, which basically told investors and all of us essentially that, hey, we've created a lot more jobs. The market's hot, and unemployment's actually getting better. So when the job market looks really good, that's kind of bad for rates. And, the last BLS report, all of the last BLS reports, all of the recent reports showed that the jobs market was getting worse. But then all of a sudden, like a sledgehammer, the Fed comes out with this report that many are wondering if it's even legitimate. And I say that because they've had to correct so many of their other ones. In fact, they were off by, what is it? Don't quote me on it, but like 800,000 jobs. So when they came out with this number, it was like, come on. I mean, are you sure on this? Like you've been wrong before. Well, that one report told investors the jobs market was good, the economy is strong, and it hurt the market immediately. So all of those gains that we had built up to from that rate cut started to go out the window, and they went quick, and they kept going. For 3 straight weeks now, the market has been getting worse. But I don't want to focus on that. I want to focus on all of the clients that I talked to and all of the people out there who got their hopes up last month for that tiny window of a refinance opportunity. But you really didn't miss, and here's why. Because your monthly savings and your rate improvement last month because of that dip was pretty good. It could have saved you $100, maybe $200 a month, maybe a little bit more. But we know that right now is risky to do a refinance because we already know that it's projected we're going to get a cut in November, December, and then next year is going to be the year of rate cuts. We know that much. It has been said. There are Fed members who have alluded towards it, and we just flat out have to. So if you miss that opportunity, you're going to get another one. It could be in December, it could be in January, it could be in February, but it's coming. And here's the best part. Yeah, you would have lowered that rate 0.5%. You would have lowered that rate maybe 0.75% if you were in the 7.5 range. But if you wait until March, or if you wait until January, or you wait till after the election, I like your chances of lowering that rate even more. And if you just did a refinance, are you going to do another one in March? Maybe not. So you're okay if you didn't refinance. You're going to get another opportunity. And I think the magic first refinance time was last month for a minute, but I don't think that is the best. I don't think that was the best time. I think the best time is yet to come. So if you can hang in there and you're not underwater and you just a little longer, let's let the election clear out. You're going to get a good opportunity soon. Of course, we don't have all the answers, but following the market pretty close for 5 years, this last, I would say 3 months have been really, really weird. And the rules that we have used to determine what's going to happen on the bond and the treasury with the treasury yields, those rules have kind of flown out the window. So we are definitely living in a world today where I would say many of the rules have been rewritten. It's getting harder and harder to predict what's going to happen next. And that's a whole nother topic. Hey, I'm Tim Rhey with Mortgage Ballers, and stay thirsty, mi amigos.